Good morning. This is the weekly recap for March 21st, 2026. It was obviously a very volatile week, which I believe represents the market looking for liquidity and individuals potentially selling all assets to raise cash. Starting off with the S&P 500, we have clearly gone below the 200-day moving average. Switching over to the weekly bar, you can clearly see that we have tagged the 50-week moving average, and the expectation would be for a bounce. However, when you look at a longer-term monthly view, there is still quite a bit of a disconnect from the 5-month moving average, which is significantly lower at 5,500. Looking at the market profile, you can see that we have clearly broken below the large balance area, and attempts to re-enter were negated. What we clearly see is that value has developed lower. The upside on any bounce would be 6,630. However, there is still the risk of a major washout that could take us down to 6,400. A lot of value at 6,230. And ultimately down to 5,990. Switching over to the NASDAQ and looking at the QEQQ. Similarly, we are now below the 200-day moving average. Looking at the weekly chart, we are again tagging the 50-week moving average. On a longer-term monthly view, you can see that we are still far from the 5-month moving average, which is all the way down at 476. This still leaves room for a significant move lower over the course of this year. Looking at the market profile for the QQQ, there is a lower target of 583. But again, similar to the SPX, a much lower target at 563 is possible, ultimately heading down to fill this gap at 532. Now, let's bring up the Volatility Index. Looking at the VIX, you can see that we've clearly trended upwards. On Friday, we tagged the value area high of the prior push. However, there is still room to run higher to 35, 41, and then ultimately 50. Moving over to the energy sector, let's pull up crude oil. Looking at crude oil, you can see that we have been going sideways along the 5-day moving average and building value higher here. Looking at a weekly chart, ultimately, if there is any positive catalyst that leads to this moving lower, it could target as low as 85. However, looking closely at the profile, we can clearly see that value is building up here. Ultimately, if it clears above 102, there is room to move further upwards to 110, 118, and 125. If we clear above that, then we are in clear air historically. Beyond 130, things could really start to get out of control. Shifting gears to cryptocurrency, here is Bitcoin. There is no clear trend right now. It is slowly trying to grind higher and break out of its balance area. However, you can see here it's in an area of significant congestion. Looking at the profile, it is attempting to build value higher with the possibility of ultimately going above 74,000, at which point you could target 78,000. To the downside, we have 64,000. Next up is Ethereum. As you can see, Ethereum looks very similar with a similar chart, and its profile looks identical to Bitcoin. However, there is a gap here on Ethereum. If we can ultimately build above 2,300, there could be a gap fill and a move higher to 2,740. Switching over and adding in an additional crypto per request. Let's look at Solana. It is a very similar chart, just slowly grinding higher. Looking at its profile, it is also very similar to Ethereum. It looks identical. If we can build above 94, then we can have an upside target of 96, 104, and ultimately 118. Moving into precious metals, let's take a look at gold. Precious metals had a significant washout this week. Bouncing at its 100-day moving average, it faces a clear, declining 5-day moving average at 4,800, which could be a bounce target. However, when you look at the profile, we have clearly broken below the balance area and are building value lower. A retest to the lower edge of the balance area at 4,690 would not be expected. Further downside continuation could target 4,325. Switching over and looking at silver, it is a very similar chart. It is attempting to hold its 100-day moving average. However, the 150-day and 200-day are clearly lower. Similarly, when looking at its balance area, it has just begun to break below it. Thus, the potential for further downside exists. Targets could be as low as a gap fill at 54, and possibly even lower to 50. Finally, let's look at bonds and interest rates. There was a significant move lower in bonds, and thus an upward movement in interest rates. Looking here at the 2-year Treasuries, you can see that this was pricing in a more hawkish Fed, with rate cuts being scaled back. This is only going to put further pressure on equities. And a further move lower in bonds is certainly possible with a continued rise in interest rates. You can also see this here in the TLT. With lower targets in the market profile available at 85.34, 84.50, and potentially down to 83.00. That is all for this week. Good luck to all, and I wish you all well.